Welcome, dear traders. Stock indexes showed muted trading early Friday. Commodity prices are falling on fears of a deeper global economic downturn. Oil-related assets are also getting cheaper following crude prices. During today's Asian session, oil prices consolidated below 4-month lows. In addition, a batch of contradictory data that stock and currency markets faced this week makes it difficult for them to determine a clear direction. That's why Wall Street closed mixed yesterday, and the Nasdaq and the S&P index soared and the Dow Jones index dropped. On the one hand, cooling inflation in the US labor market bolstered hopes that the Fed is likely to keep the interest rate unchanged in December. At the same time, fresh economic data from the United States, Europe and Asia raised concerns about a global economic slowdown. The world's first economy recorded a decline in retail sales in October for the first time in 7 months. In China, against the backdrop of a persistent deflation, companies in the real estate sector are suffering another default. In Japan, data showed that GDP in the third quarter shrank faster than expected amid slowing global demand and soaring inflation above the target level. At the same time, expectations of a Fed pause continued to wane on the US dollar. The greenback little changed after a sharp drop in consumer price data on a Tuesday, November 14. The US inflation cooled interest rate forecasts. Meanwhile, a mass sell-off in oil could put more pressure on the US dollar and Treasury yields. Crude prices have already fallen by nearly 20% in the fourth quarter, and the US dollar's losses in November were more than 2%, and it does not seem to be the limit. Thus, the greenback may record the largest decline for several months against the euro, yen and franc. At the beginning of Friday, its rate against its counterparts from the G6 basket continued to consolidate in a narrow range of 100.30 and 104.40. As the Fed's easing cycle is approaching, we can expect a gradual deflation of the US currency over the next few quarters. We have already seen signs of this week as the US dollar has fallen almost to 104. The fall of the world's reserve currency is so significant that even the main outsider of the G6 basket is preparing to close this week with growth. The Japanese yen, which is weak by default, traded against the greenback near 150.5 dollar-yen pair, has dropped for the second day in a row, remaining within the bearish range of 150.40 and 150.80 in early Friday trading. Also today, the governor of the Bank of Japan and the representatives of the Ministry of Finance made another joint statement. The markets again heard for the warning that excessive volatility was undesirable and that intervention would be aimed at curbing it. The head of the Japanese regulator, Kazuo Ueda, said that the country's weaker currency was stimulating domestic inflation, though input costs. It was good for exports and the profits of Japanese companies operating around the world. In other words, it's not clear that the weak yen is a negative for the Japanese economy. The deflation of the currency has led to the decline in the GDP, industrial production and the household incomes. The Japanese authorities see a way out by raising wages. However, employers seem to be cautious about such prospects. After all, the largest union is preparing for a strike next spring to demand higher wages. And while the central bank intends to continue its ultra-loose monetary policy, at the same time, Australia's annual wage figures beat forecast and soared to 4%. However, the country's currency reacts much more activity to global sentiment than the domestic statistics. This week, the Aussie rallied on the weak US inflation and then went into consolidation. As the US currency fell, the Aussie dollar pair was bullish, trading between 0.6452 and 0.6477. However, yesterday's rally has faded as a risk appetite has taken a back seat. As a result, the Australian dollar closed the Asian session consolidating near 0.6460. The New Zealand dollar ended Friday's Asian trading session on a less positive note. The Kiwi fell to the second time in 2 days, closing the Asian session at 0.5950. Like its Australian counterpart, the New Zealand dollar was hit by falling oil prices. As a result, the consolidation turned into correction and the Kiwi began to decline in the range of points 59.40 and 59.83. And that's all for now. Stay tuned for more updates with the InstaForex TV channel. We appreciate your feedback. Please leave your questions and comments below. And see you next time.